Hi, the recent tariff moves across the world have increased the uncertainty and unpredictability in the markets. While this period of uncertainty is likely to continue and India cannot completely remain immune to such developments, I thought let me point out a few things which are different this time from an Indian context and which will help manage the risks to some extent given the current scenario. First, if you look at the direct impact, India's exports to the US are quite a small proportion of GDP. So the direct impact is obviously much more manageable. Second, I think if you look at the corporate sector profitability, there are a lot of sectors which are driven by landlocked domestic businesses and domestic drivers, and also they benefit from lower commodity prices. If there is a global slowdown, generally what would tend to happen is that lower crude, lower commodity prices, lower metal, lower chemical prices could offset some of the pressure and result in a profit growth which is not too different from what was pre-tariff war. And therefore the chances of earnings downgrade from the current estimates of a recovery in earnings growth rate for the next 2 years is much more manageable in the Indian context. The third point is that if you look at the valuations today, the corrections in the Indian market started in December. Today, if you look at large cap valuations as signified by Nifty 50, the current PE ratio, forward PE ratio is 19 times, which is not as expensive as it was 7 months back. And at the current lower yields in interest rates and 10-year bond yields, it is becoming more and more acceptable. There is a good combination of sectors which are there in India, which are driven by domestic demand, which benefit from lower commodity prices, which have good balance sheets and are now available at lower valuations in sectors like banking and financial services, pharma, and to some extent resources and energy sector. So if you look at the overall context, I think the market is going to be less thematic and more bottom up going forward, which is what we have been saying for a long time. And in the current context, I think in the diversified equity category, investors should continue to focus on the mainstream categories, the core categories of large cap, flexi cap, large and mid cap. And in the hybrid category, the multi-asset category, because of the exposure to gold in that. So overall, if you look at the fact that the markets are going to be little volatile till the time you see all the actions from all the governments clearly visible. I think that if the investors are investing systematically and if the investors are paying enough attention to the asset allocation, I think that will go a long way in managing the risks in their portfolios. In addition to the fact that the risks for India in general appear to be less as compared to what had happened in the previous such corrections led by global downturn. So wish you all the best and safe investing. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.